What if your financial stress wasn't a side effect of the system? What if it was the product? $280 billion. Not from investments, from fees, interest, and the moments you had nowhere else to turn. If you're new here, welcome. If you watched episodes 1 and 2, what comes next completes the picture. A bank is not a public service. It is a profit machine. And the most profitable thing it ever discovered was your financial anxiety. That 3 a.m. balance check. That moment of dread. Banks have entire departments dedicated to understanding exactly that feeling. The people designing your bank account are not accountants. They are behavioral scientists. Their job is to understand your breaking point. $35 for a transaction that costs the bank nothing. Collected at the exact moment you had the least money. $7.7 billion. Collected specifically from people who had the least. That is not accidental. That is targeting. When you are stressed financially, you make worse decisions. You accept worse terms. You borrow more. Every single outcome benefits the bank. Princeton researchers proved it. Financial stress consumes cognitive bandwidth. 13 IQ points gone. And banks release their most aggressive offers precisely when your guard is lowest. Scarcity mindset is a documented psychological response to financial pressure. It keeps people trapped in short-term thinking, exactly where lenders want them. It is not a coincidence that your credit card offer arrives when you're most vulnerable. Banks buy data. They know when you're stressed, before you even realize it yourself. Your bank knows more about your financial stress than your closest friend, and it uses that information not to help you, but to sell you the next product. Pre-approved is not a reward. It is a targeted stress trigger, designed to create urgency in a mind that is already overwhelmed. The bank's most profitable customer is the struggling one, paying minimum payments, rolling over balances, too stressed to shop for better rates. Your financial stress doesn't stay at home. It follows you to work. The bank collects the fee. You pay everything else. The research is clear. Financial stress is the #1 cause of relationship conflict in America. The bank's fee created the argument you had last Tuesday. Chronic financial stress shortens your life. The $35 fee has a downstream cost that no one ever puts on the bank statement. I am not asking you to be angry. I am asking you to be accurate. Accurate is where real decisions start. 78%. 3 in 4 people around you right now, all believing individually that they are failing. None of them realizing they are experiencing the same designed outcome. It is not a series of unfortunate fees. It is an engineered system. Every point of financial friction in your life has a corresponding bank product waiting to charge you. $30 a month, $360 a year for the privilege of storing your own money in their building. They charge you to hold your money, then lend it to someone else at 7% and pay you 0.01. That gap is pure profit extracted from your trust. Your deposit is inventory the bank immediately deploys for profit. You take the risk. They take the return. 1 day late, $39 on a payment you were already struggling to make. That fee does not cover any bank cost. It is pure punishment for financial stress. 1 missed payment. Your interest rate jumps 10 points, applied retroactively to everything you already owe. That single moment of stress just became significantly more expensive. This is not a bug in the credit system. This is the feature. The spiral accelerates exactly when you are least equipped to stop it. The 17-minute hold time is not inefficiency. It is strategy. Most people hang up. The fee stands. Friction is a profit tool. The average bank account agreement is 47 pages, written in language requiring a law degree to understand. You signed it. Everything inside benefits the bank. This is a policy choice, not an accident. The same bank operates differently in countries, with stronger consumer protections. They know how to be transparent. They choose not to be here. Origination fees, late fees, annual fees, balance transfer fees, foreign transaction fees, over-limit fees. Each one engineered before you make a single mistake. You are paying the bank more to hold your money than the bank is paying you for lending it to them. That relationship will never change unless you change it. The rate they advertise is the beginning of the conversation, not the end. The true annual cost of borrowing is almost always significantly higher than the number on the advertisement. 47% of Americans have never switched banks. Not because they are satisfied, because switching feels complicated. The bank designed that feeling too. Every month you stay in a high-fee account is a month you paid for the privilege of running in place. The exit from the treadmill is one afternoon of your time. Bank job listings openly advertise. For behavioral economists and cognitive scientists, their official job title is revenue optimization. Your stress is what they are optimizing. The shame of a declined card is so powerful that millions of Americans pay $35 repeatedly to avoid it. Banks discovered this and built an entire product around your fear of public embarrassment. 17,000% APR. That is what overdraft protection costs when calculated correctly. The most expensive loan in America, sold as a free safety net. The banker never says 17,000%. They say we've got you covered. That coverage costs more than any other product in their portfolio. The points you've accumulated feel like savings. They are a switching cost, designed to keep you in an account that charges you more than you ever earn back in rewards. Paying cash activates the pain center of the brain. Swiping a card does not. Banks and retailers both know this. The card is not convenient, it is an anesthetic. They give you a tool that saves $20, while charging you $60. You feel good about both. That is genius-level product design against the consumer. The app is beautiful. The colors are calming. The language is friendly. Somewhere in the settings is a fee schedule that would terrify you if you read it. The congratulations notification is distraction. From the fee column that outpaces every savings milestone, they encourage you to celebrate. January is the most aggressive credit card marketing month in America, because January is when financial regret peaks. Banks know your emotional calendar better than you do. The system wants you motivated, not informed. Informed people negotiate. Motivated ones just accept. The bank designed the board. You're playing their game. Understanding the rules is your only advantage. This is where clarity begins, not anger. Just accurate understanding followed by action. Bank fees are not fixed. They are not laws. People who know this pay significantly less. Same table, same bills, different understanding. This is where it changes. UK capped overdraft fees by law. America lets banks self-regulate. Same banks, different rules, different outcomes. Banks spend $100 million per year fighting consumer protections. That money came from your fees. Every developed nation has basic banking protections. America keeps waiting for the market to fix itself. It hasn't. The CFPB recovered $17.5 billion for Americans. It is also the most lobbied against agency in Washington. Every time consumer protections weaken, bank profits rise immediately. Documented. Every single time. Countries with stronger banking, regulations carry less household debt. Same banks, different rules, different lives. You don't need to change the system. You need to understand it well enough to navigate it. Financial mobility is lower in America than 26 countries. That is a policy outcome, not a personal one. You now understand more than most Americans. The question is what you do with it. The system is real. The fees are real. So are the exits. Credit unions charge 60% lower fees than traditional banks. Member-owned, not shareholder-owned. High-yield savings pays 4.5%. Your bank pays 0.01%. Same federal insurance, 450 times more return. Call your bank, ask them to waive the fee. 85% of first requests work. They count on you never asking. Automate every payment 2 days after payday. 1 afternoon of setup. 0 late fees forever. Turn off overdraft protection. A declined card costs nothing. A $30 fee costs real money. Keep a $500 buffer in your account. Treat it as zero. It does what overdraft pretended to do, for free. Download your bank's full fee schedule. Read it once. You will either switch banks or never pay those fees again. Shop for a bank like you. Shop for anything. Compare fees. Compare rates. Loyalty to a bank costs you money. Automate savings the moment your paycheck deposits, before your brain gets involved. People who automate savings save 3 times more. Not through discipline, through removing the decision. Banks study how to extract money from you. The least you can do is understand their playbook. Call your insurance provider, your internet company, your phone carrier. Prices are almost never fixed. $500 in savings measurably improves decision-making. The buffer protects your thinking too. Families that build wealth talk about money openly. Start that conversation. It changes everything. Fix the leak while also increasing the inflow. Both sides of the equation matter. One bank switch, one automated transfer, one fee call. Any one this month changes every month after. You don't need to fix the system. You need a plan for the system that exists right now. Same bank, same fees, different understanding, different decisions from here. Your financial stress had a profit motive behind it. Now that you see it, you cannot unsee it. The stress was engineered. The fees were designed. The exit is clearer than they wanted you to know. The middle class isn't struggling because Americans are bad with money. The stress was designed in one decision, compounded over time. That is all it takes to change your financial trajectory. Share this with one person who banks without knowing what they're paying. It could save them hundreds. Episode 4 drops tomorrow. Subscribe so you don't miss it. Episode 1 and 2 are in the description. Watch in any order. All 3 together change everything. The bank didn't change. Your understanding just did. Same table. Different decisions from here. The system can be understood. Navigated, one household at a time. Understanding a system you cannot immediately change is not defeat. It is where navigation begins. The people who built wealth in unfair systems understood the rules better. Now you do too. Same paycheck, different understanding, different decisions. That was always the only variable. The bank profited from your stress. That stops the moment you understand it. The bank is the same building, the household making decisions. That is what changed. Information without action is entertainment. Action without information is expensive. You now have both. Same table, same bills, different understanding. What you do next is real. Not all 3 today, 1 this week. That is enough to begin. One financial truth every day, no jargon, no selling. Subscribe now. Clarity is built decision by decision. You just added one more layer. You came in wondering why banks always win. You leave knowing exactly how. The bank was fake in its care for you. Your next move doesn't have to be 3 episodes, 3 connected traps. Episode tomorrow, why lottery winners go broke. The bank problem has a solution. It starts with the next decision you make. Understanding a system you cannot change is not defeat. It is where navigation begins. The fees were real. The psychology was real. The exits are real. Now you understand all 3. The bank profited from your stress. Understanding it ends that. See you in episode 4. The bank was fake in its promises. What you do next is real. See you in episode 4.